Hello, this is Zahra from OTED Markets. We'll be with you with a short review on US personal income and spending data and its effects on financial markets. As always, first let's check the data and what we had on the economic calendar, and then we can see the market reaction. So on the data front, we have the personal income in the monthly case, which is increasing by 0.2%. It is much lower than 0.4% estimates on the previous month as well. That means that the inflation in the next months can get slower, can be a little bit slower because the people's income is less. When you have a less income, you have a less spending and less demand as well. But at the same time, the core PC price index, which is excluding the volatile food and energy prices, the inflation of the core PC price index stayed unchanged at 2.6%, while the market was expecting to fall a little bit slower to 2.5%. So it was same number. We saw the same number as the previous month. So the core PC price didn't change. But at the same time, the PC price index, which has increased by 0.1% monthly, as you can see in the chart, helped the annual number to fall to 2.5% in June from 2.6% that we had in May. That means that the inflation, general data, what we have here, while the personal income is still in line with is much less than expectations, while the personal spending is in line with the estimates, while the PC price index, both in a monthly and annual cases, is in line with estimates. And well, just like core PC price, just on the general, just on the annual case, in annual scale, didn't fall as it was expected, so it was remained steady at 2.6%. These data generally means that inflation is under control. So inflation is under control, and we should not be worried too much about the next month. So while we don't have a surprise in numbers, let's see what we have in a chart and how these data and these numbers affected the economic chart. Let's check with the US dollar index. This is the US dollar index. As you can see here, the US dollar didn't have a meaningful movement because the data, they were as expected. We didn't have any surprise in the data, so it cannot change the overall market condition that we have right now. Generally, what we have in a chart, generally in last days, that market US dollar was under pressure a little bit, and then market paused to see the PC price index. And now, while we saw the PC price index, again, it's more possible to see the previous downtrend to be the next movement, so the next movement of US dollar. But still, we cannot count too much on a downtrend as well. So this data means that the US dollar cannot increase. I mean, they don't give any reason for US dollar to increase much higher than here, but to fall more than this level is also a little bit more risky to count on that so much, because the market we have some other data in the market that they will bring the demand for US dollar. So which means that US dollar cannot increase with this data, but the bears also will not be so much powerful, so it will be under control. So we can probably have the soft downtrend, which is with the under control downtrend, which in the next weeks, before US Federal Reserve meeting. So until the next Federal Reserve meeting, which is going to start at July 30 and will end at July 31st, at the last day of the July. Until that time, we will not have a meaningful movement in the US dollar index, but it can be under pressure. On the stock market, as we saw, as we had no surprise in the market, the stock markets also cannot get any meaningful movement. But still, these numbers mean that inflation is under control. With under control inflation, we can expect that Federal Reserve to cut the rates on September meeting, which means supportive, not supportive, kind of the news for the US dollar, for the US index. But still, as we have since there is also we have the earnings results, and the earnings results, they are not that much impressive. These numbers cannot change the market's direction. So yeah, the bears can be a little bit slower. We cannot count too much on downtrend right now. But I mean, the downtrend, the overall downtrend that we had, it can continue, but we cannot, these numbers cannot perjure the current downtrend. But still, while, because actually they can somehow they hold this fast downtrend. So the downtrend will be a little bit slower, but still the number were not that surprise numbers that we can say, okay, with these surprise numbers, we can expect the Federal Reserve to cut the rates much faster and much higher and much bigger, so which can help the stock market to rise from these levels. So that's generally not the overall trend. Cannot be changing. US dollar index cannot be changing stock markets as well, because the numbers had no surprise for us. So that's the overall what's happening in the market and what's going on in the market, reaction and the data reaction. If you had any other question, please do not hesitate to write under this video in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye.